Hello everyone. Welcome back to our channel, where we simplify the world of finance for you. If you're new here, don't forget to hit that subscribe button and give us a thumbs up if you find this video helpful. Today, we're diving into a topic that affects almost all of us at some point in our lives: credit cards. So, how do credit cards actually work? Let's break it down. Now, you might be asking yourselves, what's the big deal with credit cards? Well, that's a great question. To understand how credit cards work, we first need to look at what they actually are and how they fit into our financial lives. At their core, credit cards are a financial tool that allows you to borrow money from a bank or financial institution up to a certain limit to make purchases. Let's break this down a bit further. When you apply for a credit card, the issuer will assess your creditworthiness. This is typically based on your credit score, which is a 3-digit number reflecting your credit history. The higher your score, the better terms you're likely to receive, such as higher credit limits and lower interest rates. For example, someone with a score of 750 might get a credit limit of £10,000, while someone with a score of 600 might only qualify for £1,000. Once you have your credit card, you can start using it to make purchases. But here's the catch: you're essentially borrowing money. When you swipe your card, the bank pays the merchant on your behalf, and you're expected to pay the bank back. Let's say you buy a new laptop for £800. You can charge that amount to your credit card, and you'll need to pay it back either in full or over time. If you pay it within the billing period, usually around 30 days, you won't incur any interest. But if you wait, you'll start accumulating interest on the remaining balance. Interest rates on credit cards can vary widely, but they often range from 15% to 25% or even higher. That means if you only pay the minimum payment each month, it could take you years to pay off the balance, and you'll end up paying far more than you originally spent due to interest. To illustrate this, let's say you have a £1,000 balance on a credit card with a 20% annual interest rate. If you only pay the minimum £25 per month, it could take you over 4 years to pay it off, and you'll end up paying nearly £400 in interest. That's a hefty price for convenience. Another important concept to understand is credit utilization. This is the amount of credit you're using compared to your credit limit. Experts recommend keeping your utilization below 30%. So, if you have a credit limit of £1,000, try to keep your balance below £300. High utilization can negatively impact your credit score. But credit cards aren't just for borrowing money. They can also offer benefits, such as reward points, cashback, and travel perks. For example, some cards give you 1.5% cashback on every purchase, which adds up over time. If you spend £1,000 in a month, that's £15 back in your pocket. However, it's crucial to choose a credit card that aligns with your spending habits and financial goals. Always read the fine print, look for annual fees, foreign transaction fees, and other costs that can eat into your rewards. So, how can you use credit cards responsibly? Here are some quick tips. 1. Pay your balance in full each month to avoid interest. 2. Use your card for planned purchases you can afford. 3. Monitor your spending to keep your credit utilization low. 4. Take advantage of rewards but don't overspend just to earn them. To sum everything up, credit cards can be a fantastic financial tool when used wisely. They offer convenience, rewards, and the ability to build a good credit score. However, they can also lead to debt if not managed properly. Remember, your credit card isn't free money, it's a tool that requires responsibility. If you found this video helpful, please give us a thumbs up and share it with your friends. And don't forget to leave your questions in the comments below, we love hearing from you. Until next time, take care, and happy smart spending.